Thanks so much for joining us. I'm Marlon Bowling with you, and we're going to be taking a look at this market action from the grain perspective here first. I want to go to this corn board. I was looking at some of the outside markets, and we'll get to that in a second. Let's go to corn. Our quotes are provided by bar chart here. So we are hanging on to some nice gains here today. September corn 14 higher. We're at 613 3/4. The issue is we got as high as 623 1/2, so we've given back a dime of that already. December now 14 higher at 5.99. Well, that means we're a penny under $6 now after we got as high as 608 3/4. So we came roaring out of the gate this morning, but things have kind of settled back just a little bit. Still double-digit gains. Soybeans, August 43 1/4 higher. We're at 14.89 3/4. Now, we're about 7 cents off of our earlier high today. November, 42 3/4 higher at 13.65 1/2 right now. Well, on the wheat market today, we have some fairly strong gains in Chicago. September gaining 26 cents. We're at 8.30 1/2. If you look at the Kansas City market here on that same September contract, we're 20 cents higher. We're at 8.71 1/2. And in Minneapolis, September is currently 26 3/4 higher. We're at 9.13. Don't forget that cotton market today, where we have December now trading 337 points higher at 91.98. So now they are bouncing in a big way to the upside. Well, I wanted to take a look at this crude oil market. This is something to behold today. Now we're $5.41 higher on the August contract. This is West Texas crude. We're at 103.94. It got as high as 104.29 per barrel a little bit ago. And not too far from it right now. We're joined by Ted Seifried of Zaner Ag Hedge in Chicago. Just some wicked market action, and it doesn't matter really what market you're looking at. This whole week has just been nuts. And I just wanted to get your take, if you can describe what's going on in this grain market today. Do you think it's kind of the old proverbial dead cat bounce, or is this more to it? Maybe it's basing out for a while.
Yeah, I think what's happening, Marlon, is that we've kind of moved past this inflation off pressure that we had been seeing in a big, big way for the past 2 weeks. So that's kind of subsided. In fact, you might have a little bit of inflation back on when you look at that crude oil strength. But now we're back kind of trading. It allows us to trade grain fundamentals a little bit. And I think the focus of attention has shifted a little bit more towards that forecast for the second half of July into August. And so we're putting back a little bit of that weather premium. We're trying to put back a little bit of that weather premium into these markets. And you've had corn go and close that gap. Now, we still haven't gotten back over the 200-day moving average. We got close to it, and then we backed off of it. So that's maybe not a great sign. I'd really like to see corn regain that strength and close back near the highs here today, because after all the carnage that we've seen in the last 2 weeks, we need some of these bigger days to kind of reverse the tide. And then for soybeans, we haven't been able to fill that gap. We did get back to the 200-day moving average, which is what we gapped below, but now we've backed off of that as well. So it's been a very good start today, but we need to follow up with that. Whether we close up near highs or not today, we need to close with some very solid gains, and then we'll need to follow up with that tomorrow. If we can't do that, the highs that we have for both corn and beans here today are likely areas that if we can't get over them in the rather short term, well, that was the corrected bounce targets that we had. So, yes, we're still on thin ice, even though it is a really nice day that we're seeing today. Keep an eye on that crude oil market, though, because like you said, I mean, there's a tremendous amount of strength there today, but there, too, right to the level that we would have expected to see it bounce to, and now whether it can get through it or not is a big question.
That's a great point, and something we're watching very, very closely here. It seems like it's decision time here on the grains. It's corn's turn right now. I mean, we're getting into pollination period. The weather is critical of importance right now, and some folks are getting much needed rain, some are not. And so now the question is, how does it average out? Ted, we'll come back in a moment, and we'll look at our livestock trade on a Thursday right after this. Now let's flip the coin and take a look at our livestock trade, see what's going on here as we get closer to the mid-session. On live cattle first, we have now turned lower. You know, we were a little higher earlier today. Things softening up a little bit. We have the August contract now a nickel lower. You have October down 40 cents. We're now at 139.55. That would be the biggest drop of all the contracts here on the live cattle board. On the feeder cattle trade, now we have triple-digit losses all across the board. August down 117 at 172.12. September down $1.20. In fact, everything from September on is roughly $1.20 or 22 lower. So a little pressure in the feeders here as the corn market is still hovering about 12 cents higher right now. On the lean hogs, now let's go over there where we have the August, $2.42 higher again at 111.62. It has had quite a week where it had, Tuesday and Wednesday, it was up over $3 on the August contract. Now we're almost $2.50 higher again. Let's go back to Ted Seifried. What are you watching here on the livestock trade today, Ted?
You know, watching the feeders, it had been really disappointing that the feeders weren't able to gain significantly more strength than they did with the massive sell-off in corn. And then predictably so, when you do have a bit of a bounce in corn, the feeders are very quick to give up any sort of previous gains. So, you know, that doesn't really bode well, I think, for the cattle complex. You know, when we talk about the feeders being the leaders, obviously live cattle hasn't been able to really extend any sort of gains either. Even though cutouts are really good, it seems like we're having to go and replace a little bit better than expected demand over the 4th of July weekend. So that's interesting. Real quick, the hogs are the ones that have been the real winners in the livestock complex. The last 3 or 4 trading sessions have been really very good for the hogs. We know that our export demand has been rather solid, not the Chinese buying that we had seen when they had ASF, but still rather solid. And you talk about, you know, if we're going to see a recession, if we're going to see a drop in demand for higher priced beef products, a lot of that's going to switch over to pork, which is very relatively well priced. So this might be that sort of deflationary sort of recession trade. The hogs might be a good value there. And I think there's some, you know, bigger speculators, you know, your fund type people that are sort of recognizing that and coming into the hogs market to some extent.
All right, let's look at the beef cutouts and the pork cutouts here real quickly. And on the beef cutout side yesterday afternoon, USDA said both cuts were higher. Choice cuts up 339. The selects were up 306. On the pork side, well, they went the other way. On the carcass values, they were down $2.98 yesterday. Loins were up 66 cents. We had hams down $1.41. The bellies down $22.46, but don't be too alarmed because they were up like $23 at the mid-morning update. Ted, thanks a lot for joining us here today. It's a crazy day to follow, but I appreciate the help. Ted Seifried of Zaner Ag Hedge. Tammy, back to you.